Welcome. We are back. Nice start. What's up? I'm Repair, Glenn, Steven, Rounding Bottom, Guy in Hat in the chat saying we out here grilling and watching. What's up? AK, Guy in Hat also drinking whiskey. Cheers. D, Nicholas. We'll probably look at AMC in a little bit. So yeah, it's a new week in the market. A little bit of a pullback day today. If you watched my last stream, which was last Thursday, I said a couple things. First thing I said was I'm looking for the market to start to pull back a little bit. That's pretty much starting right now. And then I showed you all two stocks, X, which is United States Steel, and CLF. And I was saying these are two names I'm watching for potential bounce. They did lose some gains towards the end of the day, but at one point they were both up a couple percent. Nothing too crazy apart from that. You know, we gapped down today. Pretty much the price action was the market gap down. You rallied up like kind of halfway back up, and then you sold off again into the close. Very like just textbook pullback day. It's too loud for me. So yeah, this week we have CPI numbers on Wednesday at 8:30 a.m. in Eastern time. So that's going to be big. That's probably what most people are going to be focused on this week. A lot of the price action is probably going to be developing around that. So that's where we're currently at. And let's head over to the charts. We're going to start off with crypto. Then I'll talk about some other markets, give you an update on that, or on those. Talk about the stock market, some individual names. I did alert a new swing for all of you today, and then 3 new swings in premium today. And I'll share some of the tickers on my watch list right now. I sent a 20 ticker watch list out this weekend in premium. I'm going to show a few of those on the stream tonight, but a lot of interesting things going on. And that's why I actually kind of like this pullback. I actually think that there's going to be opportunities that come from this. I don't know how far we're going to pull back. That's not my job to predict the future, but I'll try my best, I guess. All right. And sure, we're going to be looking at the ARK ETF as well. We always cover that on the stream. But there's something else I wanted to say. Oh, this is interesting. Looks like it changed a little bit, but don't see that very often, as far as I know. So a lot of different things going on. That was like literally €1 is $1, like I think like hours ago. It must have changed a little bit. But let's get started with crypto. And unfortunately, if we go down to the 4-hour, we were talking about this critical area on Bitcoin, and you had a major fake out, right? So at first I was looking at this like this. You have a double bottom for Bitcoin and Ethereum, pretty much the same type of chart. And this was your neckline with the double bottom. And right when I was streaming last, we were testing a breakout. And that was the critical zone, 21.6K, and you failed. You had a little bit of a fake out. And the issue with this is then it creates the argument for the bear flag, which is a very different structure than a double bottom. A bullish structure turning into a bearish structure. You know, if you really want to simplify it, because you still can look at it in both ways. That song's just annoying me. To just simplify, you can just look at it as like, you know, where was your swing high, where was your swing low? So whenever you have a bullish structure and a bear structure at the same time, just like that, you can just simplify things and look at it like this, all right? Which way does it break first? And that's what I'm gonna be focusing on probably for the rest of the week. Everything in between that's probably just chop. There's gonna be bulls bringing up one argument, bears bringing up another argument. All that matters is where the price action goes. But it's definitely not as good as it was when it was testing the breakout. So that's where you're currently at. It's unfortunate, but you're still holding the PCZ of this major harmonic kind of. Well, the harmonic is a kind of, you're definitely still holding it. And then Ethereum is pretty much the same exact thing. So it kind of is like you've been doing the same thing for about a month now. Bitcoin around 20K, ETH around 1,000, a little bit over that. Nothing too crazy. You can say the same exact thing on the 4-hour for Ethereum. You know, the failed higher low. Well, you failed to make a higher high. Now you have to hope that you can make another higher low. So we'll see which way it breaks first. One thing that is a little bit interesting as well, though, is you are developing some hidden bearish divergence. So for the sake of this swing and just for any bulls, you're definitely hoping that that gets invalidated or just doesn't perform that well. Bitcoin doesn't have the hidden bearish divergence, but Ethereum does have that developing. So keep an eye on that. If you ever want to learn more about divergence, my free course is in the description. So now let's move on to some other markets and see what's going on. The US 10-year bounced off support, that 2.7 area, had a nice bounce towards the end of last week, and it looks like it is now pulling back a little bit. Of bearish engulfing candle today. This does set up the potential, and it's very early, but if you start really pulling back here, it does set up the potential for a head and shoulders pattern on the 10-year. It would be interesting, like let's say, you know, now we start to get like a little bit of a back test on the market, and then you kind of like, if we just go over to the NASDAQ for a second, like, you know, we had that wedge. Let's say now we back test for the overall market, pull back a little bit more, and then while we're going up, then you have the US 10-year head and shoulders play out. That would be an interesting situation. But what maybe could save it is some triple hidden bullish divergence. We'll see what happens. It's really just, does it break above 3.2 first or break down under 2.7 first? Crude oil future, not really doing much, kind of just bear flagging. Look at it like this. Yet another bear flag. You could see the last couple of ones playing out. So this is kind of like the third one in a row. You could even look at this as a bear flag. So it's just bear flag, breakdown, bear flag, breakdown. Even have hidden bearish divergence here. Maybe could see a continuing decline for crude oil futures, which would be interesting. And then, you know, at some point, maybe you break that supply line on the daily, maybe after another sell-off, who knows. So mixed arguments there. Moving on to metals, just consolidating after dumping. Gold broke down from that pattern over there. It's now retesting lows from September of last year. And silver, same thing, broke down from major supports. See if it got to the next level. It's actually pretty much there. You can see this 18.9 level pretty much, kind of resistance here and here and here, and now you're attempting to flip it into support. Since the COVID crash lows, you've pretty much made a golden retrace as well, right at that exact level. So it is an interesting area to see if you maybe get a bounce there. And here we go, the euro. Let's see if we can look at this. So this is the euro to the dollar, which is a very different chart than the chart we were just looking at. So yeah, pretty much a euro is a dollar right now. And if we look at just the dollar currency index, going crazy. And if you've been watching the stream since literally last year, you know how bullish I was on the dollar currency index right over here. We had a falling wedge and then a cup and handle. And then just even recently, we talked about this just weeks ago, this bull flag with the hidden bullish divergence. I mean, really the only bearish pattern you had in the last year was this rising wedge, and that pattern literally broke up, right? Bearish patterns can break up, bullish patterns can break down, but this is crazy. I mean, this is the highest level on the dollar currency index, I think, since I've been alive. Yeah, pretty much. So definitely something to keep an eye on. I don't really know what else to say. From a technical level, now you're starting to get a little bit overbought. Maybe you can start to chart out some upsloping channels or flags or whatever, but then, you know, what if you just break them to the upside again? It's just maybe focus on the fundamentals here for a bit. And then finally, the Hang Seng Index rejected that resistance and now might be breaking down. So Chinese names, Neo, Baba, XPEV, I think LI, all those names, keep an eye on those to see if this breakdown brings them lower. And it'd also be interesting if we had US stocks go higher and those go lower, what kind of disconnect do we see? Keep an eye on that as well. And I didn't even realize this, but you also had classic bearish divergence at the top there. So this does look a little bit bearish to me. And let's move over to the overall market. All right. So start off with the S&P 500. Today, the S&P was down 1%, NASDAQ and QQQ down 2%, Russell down 2%, and the ARK ETF down 7% today. And then finally, the Dow Jones was down about 0.5%, so not too bad there. But yeah, starting with the S&P 500, if you watched last week's stream, my last stream on Thursday, I was saying that it does look like we're getting ready for a pullback. We were starting to lose that volume, and then on lower time frames, you were approaching some resistance. This is what I have charted on the 4-hour, pretty much this triangle pattern. You haven't broken out of it to either direction yet. And then on the 1-hour, just looking at the levels, really nothing to do apart from that. I mean, if you really wanted to, you could just look at this as, again, another huge bear flag. But I wouldn't really think about that until you get down to the demand line, which you're not even close to for right now. So heading into tomorrow, you actually do have a little bit of an interesting range that you can keep an eye on. We can delete all of this. We have a very small range, and I don't know what futures look like. Futures are flat, but we'll see what they look like in the morning. But really between 383, pretty much today's low, 383.5 to about 387. All right, this 1% range, almost 0.8%. This little range, keep an eye on which way this breaks out. This breaks above 387, you could get this gap fill at 388.4. If it breaks down, the next area of support I have is around 381.6. You could see these highs over here on price before it broke out of that range. So low time frame range heading into tomorrow for the S&P 500. Price action was not too fun today, apart from, well, either this quick leg up around noon or afternoon, or this sell-off in the afternoon if you were in puts. That was really it. But it would be interesting. Like tomorrow, somehow if we open flat, look at this scenario. This is something I definitely will be watching in the morning. But you can see over here we have this little downsloping channel on the 5-minute chart. You also have that 5-minute bullish engulfing candle right after the hammer candle at the previous low of day. So it just sets up an interesting reward to risk. I mean, this is the probability this is going to be tough, but just look at it like this. Like, if you just look at this from a reward to risk standpoint, all right, we're placing a stop under today's low and then either targeting this range high under 387 or all the way being aggressive and targeting the 388 gap fill from today's gap down. It does set up a very interesting reward to risk on the long side in the morning, but that can easily get invalidated if you literally just fall 0.1%. But it is something I will be keeping an eye on very loosely tomorrow. We'll see what happens. And of course, who knows what can happen, because we're looking at low time frame technicals overnight. It's not always easy to do. So that's the S&P. You know, overall, I think you do have to at least accept the fact that it is possible for this to happen again. It is possible. Same thing that's been happening. Bear flag, low volume, bear flag, low volume. That's pretty much been what's been killing the market throughout the whole entire year on all of our bear market rallies. You're kind of seeing the same thing again. I'd say the major hope is not necessarily in the S&P 500, but it is in tech. And it is hoping that the NASDAQ and the QQQ, which just broke out of those wedges last week, can actually hold that breakout and backtest the wedges successfully. What you're really looking for is maybe a little bit more of a pullback, but not too much more. All right. So, and this comes like you're walking on a very tight rope right now. But really, like if we just chart this, how we're looking at the S&P 500 and those bear flags. So if we look at this as a bear flag, if we're going to be giving, you know, a little bit of probability on both sides, and let's just say you want the market to go up. Personally, I do over time. Really, what you want is this. What you don't want to see is this. So it's really just a question of how much do we pull back, and that might depend on CPI reading and however market participants react to that reading. But really what I'm looking for is this pullback to maybe go a little bit deeper, but not too much deeper. All right. I want us to be able to back test the wedge and bounce off of it, but I do not want us to go down to the point where we're breaking down from this bear flag, which could just make all of this wedge become nothing or mean nothing. So that's what I'm looking at. Maybe a little bit more of a pullback, but not to the point where we're going to be breaking this demand line. So go chart all these demand lines. Just connect your lows from the market recently. Chart those demand lines. All you really want to do right now, the main focus is just to stay above these red demand lines that I'm drawing. If you can do that, great. If you can't do that, then maybe we're going to go retest lows again. But it definitely was a nice rally last week. We're pulling back now. I think maybe tomorrow is a good day just to see what the price action looks like. And then maybe on Wednesday, well, definitely on Wednesday, we're going to have the CPI reading. And then maybe we get more of a bigger move after that. But that's really what I'm looking at. If we go down to lower time frames on the NASDAQ, you know, you could maybe start to look at these. And again, it kind of goes back to that low time frame argument I was bringing up on the S&P 500. But let's say we somehow hold today's lows, then it does bring in the potential for these inverse head and shoulders across not only the indices, but a lot of different names. Just go down to like your 1 hour charts. It's not going to be too hard to find these like inverse head and shoulders looking structures. It's just a question of, can we hold the lows we put in today? So if somehow we do, then that's going to be another trade opportunity I might be looking at. But I'm not really focusing on that until we're already retesting like the highs from like last week. You know what I'm saying? Until you're testing those necklines. It's just something I want to bring up. You might see other people talking about it if it does develop in the next day or two. So those are the NASDAQ and the QQQ. Moving on to small caps, Russell 2000. Let's go down to the 4-hour chart. See, we had this little dragon breakout. Same thing here. You know, maybe you flip, if you continue this pullback a little bit more, maybe you flip the demand line or the supply line into a demand line again. But that's what you want to do. You want to do something like this. What you do not want to do is, again, chart those demand lines. What you do not want to do is this, obviously, unless you're bearish. Then if you're bearish, that's exactly what you want to do, you know. But we're looking, or not we're looking, you look for whatever you want to look for. What I'm looking for is maybe a little bit more of a pullback to back test those breakouts on the Russell 2000, the QQQ, the NASDAQ, but just hold the demand line. If you don't hold that demand line, I'm going to completely forget the wedge breakouts, the dragon breakouts. I don't care, because we're still technically in this bear market, and those bear flags will probably perform well in a bear market, at least better than bullish patterns will until we're out of it. And we don't know if we're out of it until we're out of it. That's just kind of the catch when it comes to a market like this. I don't really know how else to put it. So that's where you're at. Finally, the ARK ETF, and this is probably the most disappointing one today. I even had ARK calls that I got stopped out of this morning. The stop did help, thankfully, but yeah, I entered some ARK calls probably somewhere around over here on the breakout test last week. I was up a little bit on Friday and actually did sell some of the calls towards the high of the day on Friday. I think 48 was like my short-term target, but I did still overnight some or hold some over the weekend, and then I got stopped out somewhere around there. I don't remember where, but it is unfortunate. You know, you've been in this range between 35 and 45 on the ARK ETF for so long. You were finally testing the breakout after already breaking out of this downsloping channel on the daily. This is what we were talking about last week. I got calls myself. I took a little bit of profit, but it only really spent one day above the range before now it's back in it. Just hard to anticipate that until it happens. So now it's just back to looking at the levels, hoping that it breaks back above 46 and holds it. Really nothing else to say. It looked like it was going to do it, and it didn't. And that's why you got to manage risk. And that's why technicals are not a certainty. So that's the ARK ETF. You even got a little bit of classic bearish divergence as well. You did make a higher high on price from here to here while making a lower high on the MACD. So again, the same exact argument. And this doesn't only go for the S&P 500 and the QQQ and the NASDAQ and the ARK ETF. It goes for a lot of stocks right now. Just look at a lot of charts. And what you really need to do, the simplest way to look at the market, not most stocks, but a lot of stocks right now, is take our lows so far from the year, drag them to the highs, and create your demand lines. That's all you have to do. If we break those demand lines, probably a decent chance we could retest the lows. If we hold them, then that's another higher low. That would be great. But we still need more data to tell whether or not that's going to happen. That's just what I want all of you to be doing, like before the market opens, so you can already have that level set out and you can know what to look for. All right, so that's my thoughts on the overall market. Maybe a little bit more of a pullback, but hopefully not enough to break us under those demand lines. That's the summary of the analysis tonight. Looking at something like the VIX, you are getting back down to a level where it has been kind of bouncing. This is really interesting. I didn't even notice this. You were up 6% today because you gapped up, but you could see kind of doing the same exact thing that you did in the beginning of June. And then what happened after the first week of June was this. So it does look very similar. All of this right over here does look very similar to right over here. And that is the scary part. And who knows if this happens again, but eventually we're hoping that we do get some price action that eventually gets us out of this whole entire system of bearishness. Unless you just want to stay bearish, I don't know. But that's where we're at. Those are my thoughts on the market. Make sure to hit the like button if you're just joining in. I just finished the market coverage. I'm going to talk about some individual stocks right now. Let's get up to like 25 likes. I think that's doable. What's up, Papa Strata, William, Corey, Nerve, Vitalik saying July 13 CPI, July 15 is consumer expectations, July 19th earnings for Q2 begins, July 27 FOMC, Then we have earnings at the end of this month for a lot of names, and then July 29th, second quarter GDP. It's a lot, especially like if you match up kind of all the different soon to come catalysts for the market with the current situation of the market looking at charts. It's just one big, let's see if it's here. It's just one big question mark. All right. Remember, you used to chart OMI. Guess what chart is outperforming every other asset in the bear market? I haven't looked at it in a while. I still have NFTs on, I think it's pronounced Vivi. Is it pronounced Vivi? I always mess up the pronunciation. I still have NFTs on that. I haven't looked at them. I know most of the ones I bought got destroyed. So I think I still have the app on my phone, but I just haven't opened it in forever. But yeah, if you remind me when we're doing ticker requests, I will look at that. So let's talk about some individual names now. And let's get started with Fisker, which was down 5% today. Like most other names, it was red today. And this is what I'm looking at on the 1 hour. All right, I still do have some Fisker calls that I opened last week. So like how I took profits on my ARK calls, a little bit profit on Friday. I didn't take profits on Fisker, and I was up like a lot on Friday morning during like literally right over here. Like, I mean, since the high of the day on Friday, Fisker's down like 7%. So my options took a little bit of a beating, but I didn't take any profits on them. I'm still holding them. I'm still keeping an eye on this 1 hour structure, this channel breakout, and then maybe, you know, you kind of already back tested, right? If the market didn't pull back, I doubt Fisker would have come back down to this area, but that's just where you're at right now. Hoping it holds like 880-ish. Probably depends on the overall market. On the daily, really nothing has changed. Close to a bearish engulfing candle, but not a confirmed one. And you are developing a little bit of a range between $8 and $9.50, $9.60. So that is Fisker currently. I alerted. Let's do a new swing last. All right, let's just keep going with the ongoing swings. CLOV down 6% today, but this swing is still in profit. I think it's up about 5% since the entry. Remember, we had the breakout on CLOV last week. Again, if you watched last Thursday night stream, I was saying I'm looking for a pullback the next couple of days for the market. So this is a stock in the market, right? And it's pulling back too. You can't really be surprised. You kind of were in autopilot mode like all of last week. Had a great run. You came up to around 266, which was your highs in the beginning of June, and then topped out there short term. This is a very big test going into tomorrow for CLOV, but this 250 level, you can see was resistance here, support here, support here. Now you're testing a breakdown. So keep an eye on that level. If you can't reclaim that tomorrow, next support I see is probably down around 240-ish, 10 cents lower. If I chart this, you can see that comes from these lows over here, that resistance, and then this high over here. And then, of course, you could also chart this. So I guess those are your 1 hour levers. It's kind of like 10-cent increments. And you've already done the hard work on the daily. It's just a question of how much do you pull back before going higher. See what happens. SOFI down a few percent today. This swing is still in profit as well, up about 4%. There is some resistance on lower time frames. It seems like you have a little bit of a supply line developing like that. It's kind of like a megaphone pattern or a broadening wedge, still within it. Not much else to say. All it needs to really do is get up to this 660-ish area, which used to be these lows, before breaking this swing low, and the swing can hit its first target. Very simple, honestly. Uber pulling back a little bit today. This, I mean, on lower time frames, it kind of does look like a bear flag, to be honest. That. So again, it's just, can you at some point reverse before breaking under lows? That's the big question. So that is Uber. And then the new swing I alerted today is Best Buy, which was one of the names that I found just through scanning over the weekend that I sent in the Watch List to Premium members Saturday. And this is a very interesting chart. You have triple classic bullish divergence on the daily. This is all occurring at the PCZ of a bullish Gartley. Even if you want to look at it a little bit differently, you could kind of look at it as like a cipher too. But this is another, just add it to the list. Just add this to the list of, from the COVID crash lows to right now, a harmonic pattern. Okay, I can't even begin to, like, it's just crazy to me. There are so many charts that from the COVID crash lows till now, 2 years and a few months of price action, all of it turned into just one large harmonic. And it's just not on one name, it's on so many different names. Like, let's see if we can find some others. Let's go over to where I was scanning over the weekend. See if I can find a good one. Square. Just all of these charts showing these harmonic patterns. Like, this one's not a good example. Could have been, but it didn't really pivot. Let's see, let me just run through them. There we go. SHAK. All right, COVID crash lows till right now, all of it turned into just one large harmonic. IXIC. Here we go, one large harmonic. It's just crazy like how many times this happened. I'm gonna go back to that watch list in a second. But yeah, Bed Bath & Beyond, that has a very similar ticker symbol. But Best Buy, bullish Garley, triple classic bullish divergence. Even if you ignore all of the larger picture, you can have a shorter term breakout being tested of this wedge. And all of this is occurring at this $63 level, which used to be support over here, and just recently was used as support at the bottom. So this is the latest swing that I've alerted Best Buy. See what happens. And yeah, over the weekend, I sent this watch list to premium members. It was like, I just was doing my normal scanning, and it was just chart after chart after chart showing crazy variables. So that's why I was also saying earlier in the stream that I don't mind this pullback, because it could set up a lot of, not financial advice, dip buying opportunities for some of these stronger looking charts. Of course, you have to see how their earnings do towards the end of the month, or all of them are going to be a little bit different. But these are like, and it's not just these. If I spent enough time, I could probably find another 20 that looks similar to these. It's just a lot of different sectors of the market doing the same exact thing at the same exact time. So let's look through a few. I just showed you all Shake Shack. This is just a major harmonic pattern. It's also got classic bullish divergence. It's also testing a huge level. Look at these highs over here at 39. Look at the low over here. It's back at that same level. We also looked at IXIC, another one, huge harmonic pattern, back testing previous resistance as support, double bottoming. Kind of like, it's not textbook, but kind of divergence on the RSI. On the RSI, you can definitely find the bullish divergence. It's just, what do I teach? What have I learned from people like Mitch Ray and so many other great people? Divergence, harmonics, historical areas flipping previous resistances into supports or springing off of previous supports from the past, wedge breakouts, I don't know if I said double bottoms, volume signatures, all those things that I talk about that I look for on charts, they are so easy to find right now if you just do scanning for an hour or two. So it's all about picking the companies that make more sense long term, because not all of these harmonics are going to play out, and managing risk, because not all of them are going to play out, like I said. But if it's really easy to find these charts, if they're kind of popping up all over the place, that is something you got to think about as a trader, because they weren't doing that when we were up over here at the end of last year. None of the charts could have possibly looked like a bullish harmonic when you're literally at all-time highs on so many different names. But now that you've lost 50+% of your value on so many of these stocks in like half a year, that opens up potential opportunities that historically in the market you get rewarded for by being patient, if you can pick the right names, which is what I'm going to try and do, what I'm going to try to help all of you do, with of course all the disclaimers that I'm not a financial advisor. But that's really where we're at. Let's see if I can find one more. Airbnb. It's just all one large wedge. You've got some divergence here over as well. I'll do one more. This is just a random one. I don't even remember what this looks like. Another downsloping channel with divergence. Like, they're all over the place. You just gotta do a little bit of scanning. If you ever want to see like my scanning streams and like how do I find these random charts that I show all of you, and how do I send a watch list every single weekend, how do I find these names, go to the quick education channel in the Discord. And then right over here it says scanning streams. If you click this, it'll give you a list of all the scanning streams I've done. I used to do these like maybe like once a month, where I would just scan for all of you. But now you could just go and watch those back and see how I do it. There you go. So those are my updates on the market. Futures are pulling back a little bit, but they're just really flat. And yeah, make sure to hit the like button if you didn't already. Hit the subscribe button if you're new to the channel. So yeah, I already see a few tickers in the chat. you want me to take a look at anything on TradingView apart from like OTCs and like pump and dump stocks and stuff like that, drop it in the chat and I'll take a look. So yeah, I know there was OMI. Do you think a lot of these fintech companies will ultimately go bankrupt with higher interest rates? No clue. That's definitely not my area of expertise. So I don't like to talk about things I'm not too educated on. HSY, the Hershey company. What's up, Leo? All right, so let's get started with the crypto OMI. We used to look at this every night on stream. To this day, this is still one of my favorite projects. It's very unfortunate what's happened to its price over, you know, this year, like a lot of other assets. Unfortunately, the BAT, it looks like just did nothing, but you came down to support whatever this number is, and you're holding it for right now. I want to start getting back into crypto. If I do, Bitcoin, ETH, I've already told you all how I feel about those charts right now. Maybe something like this with a stop loss under support. One of my other favorite projects, and I've never been paid by any of these projects. These are because I know there's a lot of shilling in this space. These are just literally my projects I used to look at. I have not looked at this chart in so long. OXTUSD, if I do get back in crypto, I'll probably be playing this with a stop loss. Yeah, it's just crazy what's happened to a lot of these. Chainlink. You know, I have a special place in my heart for all these different altcoins. They're really what got me into trading, and I definitely missed out a lot over here, you know, by not being in crypto. But I've definitely not been missing out on crypto in the last few months or year, I guess. But trust me, I am looking at getting back into it. Link, OXT. I liked BAT, Basic Attention Token, Brave Browser. I haven't looked at that in a really long time. Yeah, just all of these projects are kind of back to where they were when I was kind of keeping my eye on them. But like basically I was around for like, I'm trying to remember. Like literally this is when I was in crypto on all of these different names, right? And like probably it's like somewhere over here is where I sold them. And then I just pretty much haven't really been in crypto since then. Like I was feeling a lot of FOMO up at these areas, but I just resisted it. And now we're kind of back down to where we were. So now this is really where I'm going to be paying attention again. I literally told you all last week on stream that I want to spend like one night this week looking at altcoins. So we're going to have to get around to that at some point. It's just, I've been so focused on stocks lately. I haven't really had time to look at so many of these charts. I definitely should. FFIE kind of already broke out. I mean, look at that. It's too perfect almost. Broke out, went right up to resistance, showing resistance at resistance. Like, you can't make that stuff up. At this point, all you can really do is chart levels. You know, it's a lot easier to chart an asset when it's consolidating and doing things, but when it literally does this or does this, it gets a lot harder to chart an asset. So right now it's just keeping an eye on the levels. The Hershey company. I don't know what you see. You did say something about it. I don't know what's going on with the stream. It's really weird. It says your current bit rate is lower than recommended. I don't know if I'm lagging or what the deal is, but we'll just keep running it. Where was the message? Oh, could be an ascending triangle. Probably looking at like something like this, maybe like on lower time frames. Definitely could be. Just to kind of zoom out though, I'd say it's back in this little area. See these previous highs and lows here. Kind of just back in that same exact range. FUBO, I wouldn't even look at the chart. I mean, always look at charts, but I'm from like just from like a long-term standpoint. Chart really doesn't mean anything right now for names like this, like FUBO or VRM, or like lots. You know, these types of charts that, you know, were very fun names not too long ago that have become pretty much the opposite of fun now. Look into them, because there's a lot of stocks that have lost 50 to 70% of their value in the last year, but these ones they're just on a different level, like on a different level. We're talking 95% from, of course, from like literally from like the high, but like even just from like, I don't know, from this 93, like that's just crazy to me. So it's a 95% decline from $62, and it's a 93% decline from 34. So really, like in hindsight, anybody who was in over here compared to getting in over here, like if we were just to go back in time, it looked like the person who got in over here had a much better situation than the people up over here. And at the end, when it literally goes to almost nothing, it really didn't matter like what price you got in at, which is just crazy. And it's why a lot of people have seen very rough returns so far this year. I mean, you don't see this. I mean, yes, in individual stocks it's always possible, but when this has happened to like so many different names, it's literally like post-COVID market, but opposite. You know what I'm saying? Like instead of doing this, we're doing this. Or if we just inverse it, this is pretty much what we were doing after the COVID crash. And now moving on to box. This is actually really interesting. There's a lot of choppiness here, but you can clearly see that there's this resistance range that's trying to break back above. It also just got back above the 200-day moving average, and it's also reclaimed this demand line. And on top of all of that, you can look at this as an inverse head and shoulders as well. So a lot of different things going on over here. If it can really hold above like 28 bucks, then you don't have a lot of resistance above that. This is pretty much like your final resistance that you're testing. DRV, it did just break out of this down sloping channel. They're pretty much your levels. That's really it. Live cattle futures. I don't think I've ever looked at this. So, okay. Bullish engulfing candle today. First close over the 200-day moving average since June 27th. Those are your levels. Maybe you try like a supply line here. Kind of look at it as like a triangle pattern that's testing a breakout. MACD crossover to green. Big volume today. Let's kind of chart the areas where you had big volume before and see what happened after that. So it does look like it's kind of led to some reversal. It's not really over here, but over here and over here. So you're retesting that. Something's going on here. All right, cattle is up to something right now. BBY, we looked at that earlier in the stream. That's the new swing Best Buy. That's going to be in the timestamps. Look at AMC. Bear market makes millionaires, not bull market. Yep. And Vitalik saying, I work on the Web3 space. All the big tech companies are going big into blockchain tech. I've been watching a lot of videos on YouTube. Just about, like, I didn't do it when everybody was talking about NFTs and Web3. I didn't really want to. It just felt really fishy. It felt like a very fishy space to me, and I think there were a lot of fishy things going on in the space, and probably forever there will be. But I think really after we've seen these declines, it's really starting to separate like the value from what's garbage. So let's start off with AMC, which on lower time frames did do something interesting today. Let's go down to the 15-minute. Broke out of this little flag on the 15-minute with hidden bullish divergence. Made a nice little move, but then the market closed. We go over to the daily. It's nearing the second target of the swing. Currently, AMC is up about 30% since the entry of the swing. I alerted back in May. I don't really remember. It might have been, yeah, I think it was May. And I think it like hit the two targets like right away. And now it's kind of retesting that. And literally not too long ago, I said in the Swing Updates channel, like 2 weeks ago, I said AMC still's yet to hit the third target. And it was at $13.34 then. Right now it's almost at $15. So kind of retested the breakout. Now it's moving again. On lower time frames, I've been talking about this 1470 level. It's back above that level. 1620 is just the next resistance I see. This kind of all looks like one bull flag to me, and it might be breaking out of it. So if you can just hold above this mid $14 area, 1620 is just your next resistance. Palantir really hasn't changed. It's still in this ascending Browning wedge, still retesting previous supports as resistance. A break above 1030ish would be great. Until it does that, really not much to talk about. Down 6% today. Gambling stocks like LVS or DraftKings. I think I just looked at both of them recently. We'll do LVS. Check GameStop. Their NFT platform today sent launch. That was the news like not too long ago, but I didn't know what they were launching today. We just looked at AMC, so it'll be easier in the timestamp if we just look at GameStop first. Still in its range. Let's go on to the 30-minute chart. Range is from 116 to 150. It's in the dead middle of the range. Maybe it's kind of breaking out of a triangle here. I don't know if it did anything after hours. Went up a little bit more. It's really a range. Like it's very tough to get a longer term view on GameStop until it breaks under 115. Is that the level I was just talking about? Like 115 or breaks above 150. But this, I do think whichever way this breaks out, it's going to be a huge move after. I mean, you're talking about a range it's been in for a month and a half. So whichever way this breaks, I mean, I have my alert set on the top. I probably had one on the bottom, but I might have gotten hunted, stop hunted kind of. Yeah, alert set up on both ways. I'm just kind of waiting to see which way this breaks out. And then we're going to look at LVS. Not much to really talk about here. It's another triangle pattern. Just waiting to see which way this breaks out. It did bounce off the demand line today. That's really it. All right, so that's probably going to be it for the stream tonight. Great chat, really appreciate it. Hit the like button if you didn't already. Thank you for the 30 likes. If you're going to trade tomorrow, good luck. Oh, one last thing. I was giving updates on how the alerts are going in premium. One alert today. I've been really I alerted 4 different options last week. There was a time where I was alerting 4 options a day. Last week I alerted 4 option ideas. Today I did alert 1. It was a very simple put trade, AMD 5-minute. I saw this channel breakdown, 15-minute breakdown near the upper Bollinger Band with hidden bearish divergence, and I alerted these puts at 220. About 40 minutes later, the puts are up 20%. This is literally where I took profits myself too. I had slightly different contracts. I think I had one strike higher or lower, I can't remember. That was really it. So day trades have been a little bit harder to find because the big moves lately have been the open and the close. Really, it's really been it. And then in between the open and close, you just get these low, dry consolidation ranges, maybe a spike here or there. I can scalp it myself, but it's just really hard to alert that and also try and trade it. So I've just really been kind of stepping back a little bit from the day trades. Sent a really nice watch list out. 3 new swings today. I alerted 1 swing for all of you in the Discord. Best Buy, and I alerted 3 more. So just kind of taking things a little bit slower right now. It's still been a very good run. This is the last 16 option ideas, not including the AMD, which was a 25% gain from today. So it's still one of the, maybe my best streak ever, apart from these couple of losses. But quality over quantity is really my motto right now. So that's where we're at. Have a good night. Thank you for watching the stream. And I'll see you tomorrow night. Peace out.